I think the one thing that we've seen consistently with Netflix is this is a content story. And content has shown the highest correlation with subscriber growth. This was actually probably the more surprising thing for us in this quarter was content amortization, which is sort of the proxy we use for content growth, grew slower this quarter than it has since they launched the streaming service. And it turns out that cuts both ways. So when content growth is growing slower, it's going to have an impact on subscribers. That makes us feel pretty good because we know that content growth is going to accelerate going into Q3 and Q4, and we think subscriber growth will as well.
So it's not a lie that Q2 is seasonally, from either a content or an engagement standpoint, is seasonally weak.
Yeah,
right?
Absolutely. Absolutely. People take the summer off. There's less content on television in general, so people aren't spending as much time inside their homes. And so and Netflix's content additions typically follow that. The last couple of years, we've seen them adding more content to Q2, so it hasn't been as severe. This quarter, that changed.
That said, they kind of know this fact as well, and they still seem to have some trouble forecasting, didn't they?
Yeah, you know what, David, that's actually one of the interesting things about this, because if you look at the numbers, as Carl was saying, they missed their subscriber number, but they actually exceeded their profitability number, even though they spent a lot more money on marketing, which, and the company hasn't confirmed this one way or the other with us, but would suggest that something that was maybe supposed to make it into Q2 didn't from a content standpoint, because they spent less relative to their guidance. They spent less than they expected to when they reported back in April.
So Guggenheim looks back at some other big negative surprises on quarterly numbers. Third quarter 2015, second quarter 2016, first quarter 2017 turned out to be very attractive buying opportunities. Is this one going to be the case as well?
I think so. I mean, right, we've been through this before with Netflix for nearly a decade now. They have these misses occasionally for a variety of reasons, different times. A lot of it's been related to pricing in the past. That wasn't the case here. But I suspect, given what we know about what content spend looks like over the next few quarters, that's going to be the case here.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.